Alright traders, a very good evening to you all. This is Avril from the Tradepsyche and I welcome you all to the post-market analysis, outlook and expectations from the market for tomorrow. Alright, so tomorrow will be Thursday. Tomorrow will be Sensex expiry, and in this video we'll discuss about some of the crucial levels, supports and resistance for Nifty for tomorrow. And we'll also discuss that till what point this up move which we are currently seeing in Nifty and Bank Nifty, till what point, till what level it can come, and whether we can make a turnaround or whether we can go again bearish, and whether it is the bottom or not. We'll analyze each and everything in depth in these videos, right? So watch till end so that you might be able to understand that how to trade the markets for tomorrow for Nifty and Bank Nifty. We'll also analyze gold and crude, and at the end of this video we'll also analyze the change in OI data, what has been built today, so that we'll get the bias in the market, that are the is the market really bullish or not. All right, so let's start with the discussion. We'll go over to our Telegram group. So today morning we discussed that the markets might open 80 to 90 points gap up. Change in OI we discussed. Major support will be 23,600, major resistance will be 23,500. Major support will be at 23,600 and 500. Resistance was created at 24,000. And point to be noted here, the total open interest. We mentioned that 23,600 is a point of inflection, as C seller and P seller both are equal to each other. Resistance seems at small one at 23,800, but a major one is at 24,000 only, which signifies that we can see a pull to 24,000 till a major bearish reversal come in the markets. The major important point, if today we saw a consecutive second day of FIs unwinding the shorts. We mentioned here that FIs have again unwinded shorts from Nifty futures. Then we discussed that today is the second day of the same, so we can say that yes, FIs have turned their stance, but let's see if it sustains for a longer period of time. Overall stance neutral. We analyze the participants data, clients expecting sell on rise. So naturally, whenever the clients will expect sell on rise, markets will be buy on dips. And if you can see the moment today, we opened roughly around this point, we were continuously buy on dips till the end. And we'll see that how we managed to anticipate a little bit early that a second half might be slightly bullish, bearish. Then we mentioned that, as we discussed, that any sustaining of a prior daily high we can go long. So today we will wait for sustaining about 2660 for 1 hour, then we can think to go long. India VIX another down by another 4%. We discussed this. IT looking good. Then we mentioned something about TCS looking good for the bullish side. Then post that, in the mid markets around 12 o'clock, good number of longs had got added, right? 23,700 looks good support now, right now. Then I think around 12 p.m. I mentioned that markets never make a bottom in one single shot. So we will discuss this on the charts. But we mentioned that Nifty now has the probability to come down also. We caught the pullback from 23,000 to 23,800 via PE sell. Right, so whoever is long, we mentioned that be careful in your longs, trail your stop loss tightly. And today in the night we have the FOMC statement also, wherein the Fed governor, the Fed chair, Jeremy Powell, maybe this can be his last Fed statement. We mentioned that if the statement is very hawkish, means if he states that inflation has risen too much and we might pause the rate cuts, markets can crack. Right. Then we mentioned that OI data suggests we are in the first pullback and bottom is not done. Then we mentioned that VIX, all the markets were going up, but at that point of time when the markets were actually going up, the VIX was not falling. It means that yes, the shorts were trying to get built. Then we mentioned around 2:30 p.m. that markets were trying to take a resistance, and then we mentioned the ending comment. So nothing as of today, nothing major has happened in the market. It was a plain drill in the market, and whatever we discussed in yesterday's analysis video, we discussed that the moment we will sustain above 23,600, 660, we will try to go long. And if you see, these were the red zones. If you remember from yesterday's analysis video, we discussed that zone of 23,800, 880 will be a zone of resistance. So today we opened gap up, I think 60-80 points. We didn't restore this. We didn't, I think, retrace this gap up. And I mentioned, if you guys remember, I mentioned that if at all a gap down happens, then and only we'll think to short the markets. If at all a gap up happens, wait for a retest till prior daily close, right? So this is what we discussed, and we anticipated that in the first half, the markets can stay buy on dips. Around 12 o'clock, 1 o'clock, we mentioned that be careful in your longs, and at the end of the day, we saw a slight dip in the markets. All right. So now the analysis for tomorrow. All right. Let's go to the daily time frame, and from daily time frame, this is the third session where we have closed our prior daily high. But if you guys remember what we discussed last time, that at this point of time we mentioned roughly around 23,350 CMP 23,350, we mentioned that the markets might take a pullback. If you guys are active on my Twitter, or you are active in my Telegram group, you might know that we called for this up move, because understand the price fundamentally. After a long bearish rally, and we have already fell almost of 2000 to 2500 points in Nifty. So post that, the markets, they do not have the capacity to go more down, unless and until it's a calamity, or it's something very catastrophic for the financial markets or for the economy. If at all we have fallen like this, we will see a pullback, because the put premiums get very skewed. So for option sellers, if the put premiums are high, they see this as an opportunity to take the market slightly up, and this pullback is not a real pullback. So whenever the markets, they try to bottom out, they try to bottom out in 2 to 3 ways. Either after a sharp fall, the markets rise sharply, and then again it comes back, and then it tries to form a W, then it might bottom out. But if this rise would have been like this, a very big rise in a single day, then I would have thought that yes, the markets have bottomed out. But this is clear cut being a formation of inverse Poland flag, and we might be just ready for this down move, right? So we will know that till what point, till what level this pullback can come. All right, so first thing, from where this rally started, we'll mark some important Fibonacci levels. This is 38%, this is 50%, and this is 61.8% retracement, right? So 50% and 61.8% are called the golden zones, because if the markets, they capture the 50% of any rally, and this is roughly, essentially, we even discussed that on weekly time frame, if you guys remember, that if at all we start to go above 24,750, 23,750, 23,800, we might have a probability to go till 24,300 or 24,000, right? But today, slight profit booking has come from the top. So these three levels will be crucial, and max to max, from my perspective, the maximum pullback of this rally I am seeing till is 24,300, the maximum pullback. Post that, see, the markets, understand this perspective. Markets, whenever they show you a good bearish rally, the way prices bottom out, or the way markets bottom out, is not like this. This will not be a bottom out. The markets, whenever the first pullback comes, it is always the negative, the fake pullback. So you should never buy this first pullback. Wait for the markets, and this I made you clear even yesterday also. Let the markets come down once again, then if the markets are breaking this neckline, long at this momentum for this price action, right? So now what we are anticipating is till what point the markets can give a pullback. Let the markets give you a pullback like this. We are not going aggressive long in this pullback. The moment markets will come down, if at all we take a bounce, we will start going aggressive long above this neckline. All right, getting my point? So for tomorrow, what you guys need to remember is only one level, which is prior daily high. And this prior daily high was also the high of 12th of March. So this is an important one, because yesterday also we discussed the same thing. Above 23,650, you can see a pullback till 23,800. So for tomorrow also, I think keeping a stop loss at 23,600. If at all on hourly basis, morning, we sustain above 23,850, we can see the markets going till 24,000 and 24,100. Above 24,100, you can see the markets going till 24,300. But 24,300 can be a very good resistance, because again it is a swing high of the market, and technically this is a major swing high. If you guys see, this is a major swing high, because this was the last point from where the markets took a pullback, and it fell sharply here. So technically the markets, they have a probability to go till this point, and then again the markets can do this. So now it is the time to be slightly cautious. Whoever is a bull at this current point of time in the market, time is for them to be slightly cautious. We do not know till what point the pullback can come. Exactly, we do not know. But roughly we can anticipate and we can prepare ourselves. Maybe tomorrow also, if at all the sentiment stays bullish, if the FOMC statement is not that bearish, we might do a another round of pullback. But whoever is long from this point or from this point, if at all you see the markets here, don't anticipate this as a don't play for this breakout. Wait for the markets to give you a slight retest. Let the markets form a W pattern, then you can go long. Getting my point? So on 15 minutes time frame, we'll discuss for the tomorrow strategy. Above 23,860, aim for 24,000. Right? The no trading zone will be 23,600 to 23,860. Below 23,630, we can see the markets going till 23,500. 23,500 can be a good support for the markets. So if at all tomorrow you see a dip till 23,500, don't try to short the market here unless we break 23,500, because 23,500 seems a good resistance. Yes, it is below the prior daily low, and the general setup says that if at all we are below prior daily low, we can short the market. But sometimes what happens is on the daily time frame, if you see, I'll probably give you a very good example as of now. See, even though at this point of time, if you see, we went below prior day low, but did we sustain? No. Correct? So it might be possible tomorrow that we might give a dip till 23,500. But since we are very near to 23,500, after falling, we will be very near to 23,500, and 23,500 will be a psychological support. The probability of markets falling below 23,500 slightly remains low. And even if it come and touch with 23,500 like this, we will see a bounce like this, and if the markets have to go bearish, then and only we will go down. So I will say personally, if you are a safe trader, don't trade until and unless 23,500 breaks down. Even though 23,600, see, by default we have to short below 23,600, but what I am saying is only and only short the markets below 23,500 if we sustain. Miss these 100 points. Let's suppose you short just below 23,500 and within rapid movement it touches 23,500 and quickly it resumed back. Then you will be trapped. So to make a better entry, to make a safe entry, short below 23,500 only, because below 23,500 there is no support till 23,300, and once 23,300 breaks down, you can again see the Friday lows. And if you guys remember, now we have last 2 trading sessions left in the market, right? Yesterday we discussed that today can be the probability that the markets can turn down, but it didn't turn down. So it is a sign of slight bullishness, but I don't think so that markets might go more bullish above than 24,330. Markets eventually have to at least come down once, then form a double bottom or W based bottoming out pattern. Getting my point? So on 15 minutes time frame, if we open again tomorrow a good gap up 160 points, 100 points roughly at this point of time, wait for a slight volatility pullback and then try to go long at this point of time. The same way how we did tomorrow. Same strategy. If at all we open a big gap down tomorrow roughly at this point of time, so these bulls will feel trapped, right? So they will try to give a small pullback to exit the market, and then the markets can show you a good trending down momentum. Why we have less probability of a gap down being bought and the markets turning bullish from that point is because this pullback is not a strong one. If this pullback would have been like this, then I would have considered this as a very strong rally. See, whenever you are trying to understand the price, always look out for intensity. So the pullback for this intensity is weak. It's not a good pullback. Getting my point? So tomorrow, try to remain cautious on the downside. If at all you see 23,620 getting broken down, that will be the first sign that the markets are trying to go again bearish. Getting my point? I hope the price action is clear. So for tomorrow, simple strategy. Above 2860, if we sustain on hourly basis, trail your stop loss to 24,100. Below 23,500 only some successful shorts can come. Right? From overall basis, I think still the markets, are coming back to the normalcy. but we have heavy resistances on the upside. So if I'll try to make resistance zones, so this is the resistance zone number 1, and this is a big resistance, which is the resistance zone number 2, 24,330. Between this, I think you can consider this as your another resistance zone. Getting my point, traders? One second. Yes. All right. I hope you are getting my point. From weekly analysis, the fall which we saw last week, it is almost 50% retraced. If at all you guys remember the weekly analysis video which we did, in that we mentioned that above 23,750 we have a probability to till 24,300. And why I'm saying max to max pullback till 24,300, because it is a weekly level and this is an ultra zone of a big resistance. So I don't see this resistance getting broken out on upside for a very long time. This is a picture perfect price action for the markets. See, we always have discussed that markets can do this price action. So whenever markets try to, we came down till this point, we made this small shoulder of the right hand side and we broke this head and shoulders. So the range for this head and shoulders, if you guys see, let me bring back that. So the range for this head and shoulder is this one. So we can project the exact range on the downside and we can aim for this momentum. So we still have incomplete price action on the downside till 22,000, right? So this is a good pullback on the upside and it's a good chance for the bears to enter back in the market. Getting my point? But we successfully, if you guys remember what we discussed, that from 23,000 the bears have exhausted and we can see at least 1,000 point pullback, right? So don't get your hypes so much up on the bullish side. It's just a dead cat bounce as of now. What we discussed in weekly analysis video, that until and unless we cross and close a daily candlestick above prior weekly high, we cannot go aggressive long in the market. All right, so try to be cautious on the long side as of now. If you are a bull in the market, from tomorrow, I think Thursday and Friday, we can see some selling pressure. All right, so let's go to Bank Nifty and we'll discuss that on the basis of see, Bank Nifty, what we discussed yesterday, I think if at all we try to go above 55,000, you can target 55,500 or 55,600. Exactly, it has happened today, right? Above tomorrow, for tomorrow, Bank Nifty above 55,600 only, you can see 56,000, right? This level above 56,000, you can easily see the level of 57,000, and this will be a quick move. But 56,000, mind it, it's a good resistance. Yes. So even Bank Nifty is showing a good reversal on the top. If this supportive trend line gets broken down, we can again retrace this back. Then once, if the Bank Nifty comes at this point, the Bank Nifty will make a decision that whether Bank Nifty has to make a double bottom W pattern or it has to give you a continuation momentum. But yes, now a down move is due in the markets. Tomorrow is, so this was the analysis for Bank Nifty, same gap up, gap down opening strategy as we discussed in Nifty. Tomorrow will be Sensex expiry. So let's have a look at the Sensex premiums. See the Sensex premiums, if you see. Alright, so now if you see, we have at the money, the IV is for Sensex, I'm talking about, at 76,700. We have huge premiums. So tomorrow is going to be a wild day. We have almost 700 to 750 premiums at the straddle, which is very huge for Nifty, Sensex. Generally, these premiums are 250 to 300. But as of now, today, the premiums are very high. It means the markets are expecting a wild move either at opening or after opening on the markets. The general analysis, the support for Sensex is 76,500. If this breaks down, you can slide down till 76,000. Short covering in Sensex will only come above 77,000. Alright. Let's discuss change in open interest. The change in OI today for Nifty is uh, slightly more addition of longs as we saw yesterday. So the bias is still slightly bullish, but I don't think so that this is a real bullish move. Open interest, total open interest, still we have more call shots in the system for Nifty, right? The major support is at 23,500. So that's what I'm saying. If at all we come back again 23,500, we will see a technical bounce of 50 to 100 points. Then we might again do some shorts, right? So that's why I'm saying even if tomorrow 23,600, 650 breaks down, don't try to short the market because 23,500 is a good support in the market. OI change in Bank Nifty. OI change in Bank Nifty, yes. Huge addition of longs. And the major support which has got added today is at 55,000. Total open interest, still we have more bulls in the system as of now with 55,000 as the ultimate support. If tomorrow 55,000 breaks down, I think we might give a trending bearish markets. Mind it. Alright, traders. So this was the analysis for the markets. Let's do an analysis for crude. Right, crude was trying to make if you see head and shoulders pattern, but it took a humongous support from roughly around 8600, and crude is trying to break a trend line on the upside which is coming on from the top. So for crude, if at all we are able to clear 8856, above this I think crude can really go bullish for 8982 for 9000 level. Above 9000 I think it can capture 9250, and above 9250 again it will start to fly till I think 10,000. Alright, getting my point. But if at all you're long and the markets break down on the downside 8700, then again I think crude can go bearish. Alright. For gold as we discussed is currently sell on rise. We even discussed this yesterday. Gold is on a very weak stance. The moment we break 155, we can aim for 152 and 151. The only bullish thing in gold which can happen is above 157 for 160. Alright, traders, getting the analysis. So this was the analysis for Nifty, Bank Nifty, gold, crude, OI data. And I hope you have understood the market for tomorrow, that how to trade. And one more important thing, VIX although has crashed down today, but if you see, there is the futures and the spot have almost come to equal. So there is no premium left in futures. All still today is I think what 18th of March. Still I think the expiry is at I think 30th of roughly around 30th of March. If at all you want to see what is the last I think 30th March. Still we have 8 to 9 sessions remaining. So 8 to 9 sessions, the premium for that should be around 60-70 points. But technically we are left with zero premium. That hints that markets have absorbed all the bullishness. And this is not a good sign for the bulls. If at all we tomorrow see a gap down opening or a flat opening, tomorrow I think bears will attack for once. But the crucial point will be to see that whether 23,500 breaks down or not. If it breaks down and sustains on hourly basis, then I think we can essentially hit 23,300 and 23,000. Getting my point? Alright, traders, so this was the analysis for today. For tomorrow. If you have liked the analysis, leave a like to the video. If you have any doubt, ask me in the comment section. Share this video with your trader friends. Cheers, stay safe in the market.